One nation, one tax, one market. That's the vision behind GST, the most transformative tax reform policy being attempted by the government of India. So, what is GST and what does it mean for the future of India? At present, there are two main tax collecting bodies, the central government and individual state governments. The central government levies a tax called excise duty on goods manufactured. Then, each of the 29 states have their own tax laws and rates for goods produced and sold in a particular state and across states. So, what does this mean for businessmen? Let me give you an example. Imagine you're a manufacturer of shirts with your factory in Gurgaon, Delhi. Let's say you buy your raw materials from Tirupur in Tamil Nadu. You have to pay taxes to the Tamil Nadu government on the purchase of raw materials. Then, you pay an entry tax to Delhi when you bring the materials into Gurgaon. After the shirt is manufactured, you send it to Bombay to a retailer. You pay entry tax again and service tax for transportation. The consumer, who eventually buys the shirt in Bombay, pays VAT on the shirt and all the other taxes throughout the supply chain. Hence, he ends up paying tax on tax. With GST, the various taxes levied by the centre and states will be merged into a single tax rate on all goods and services. This will result in two separate revenue streams, one for the states and one for the centre. So, what are some of the benefits envisaged? GST will make it easier and more transparent for manufacturers to manage taxes. Also, it will unify the country into one single market with a similar tax rate across the nation. And it will reduce the tax burden for the ultimate consumers. In addition, GST will help in reducing overall costs of production and in decreasing long-term inflation. These benefits, in turn, are expected to attract more foreign investors, leading to a growth in GDP. Analysts predict that a well-designed GST can boost GDP by up to 2%. Are there any downsides to GST? Firstly, the centre will become more powerful as they decide how much revenue of the tax goes to the states. Also, some states which are highly dependent on their products will now have to share more of their revenue with the centre. So while there are significant challenges in implementation, such as getting consensus from states, at a country level the pros outweigh the cons. Therefore, GST is expected to be implemented at the beginning of the new financial year on April 1st, 2017.